Yo, what's up guys? It's your boy Looney, and today I'm going to show you exactly how I spot good option trades in under 10 minutes. Now, this isn't going to be about guessing or just hoping for the next big move. This is about using data and indicators that give me a real edge. Because when volatility spikes and the market looks scary, that's when the best opportunities show up. So in this video, I'm going to break down exactly what I look at step by step before selling any option. But before we get into this video, quick shout out to the Discord. It is free to join, and I also offer a premium membership for $8 a month, and you get access to one-on-one coaching, trade callouts. I have an option selling course. I do giveaways and more. You can check it out. All the links are in the description. Now, let's get into this. And the first thing I look at is the VIX. And the VIX is the volatility index, and it measures fear. Now, you see when VIX is low, option premiums or cash secured puts are weak. And when the VIX is high, premiums get juicy, or cash secured put premiums get juicy. So when I see the VIX climbing over 20 and going to the 25 range, that's my signal that fear is back in the market. And that's usually when I start selling puts and maybe even do some credit spreads that I could show in a little bit. But when volatility is high, the option sellers or the premiums are greater and you get paid more. And that's where your risk versus reward starts leaning in your favor. Now, you can't just rely on the VIX alone. There's other indicators that we'll get into in a second that I also look at, but I think the VIX is a very good starting point because in my head is if the VIX is low and the stock is also dropping, sometimes I'll just kind of stay away. I need that perfect combination of the VIX increasing and also the stock decreasing. So there is that. And let's actually look at a stock because there's other indicators that I do look at. And let's look at Riot because Riot is one of my biggest positions in my portfolio. And I was able to get a pretty good position by doing this strategy. Now, I like to look at the Bollinger Bands. So we're going to pull up the advanced chart, look at the 1 month, and it's very easy to set up the Bollinger Bands. You hit this little F-looking symbol, and the BB is the one that you're going to be looking at. So that's how you set it up. And it is one of my favorite indicators for spotting short-term overbought or even oversold conditions. So if a stock is trading below the lower Bollinger Band or near the lower Bollinger Band, that sort of tells me that the price is undervalued or it's sort of stretched too far down too fast. And that often means a short-term bounce might be near. And that's the point where I look to sell cash secured puts or put selling opportunities. And this is especially on stocks I already want to own, Riot being one of them. Now, on the other hand, kind of similar to if the VIX is low, you want to be selling covered calls. In this scenario, if the stock is trading towards the upper Bollinger Band, this is where it's signaling that things are a little overextended. And this is a great spot for covered calls and maybe even some credit spreads. I'm not planning to do that in this market, just how bullish this market has been. I don't want to fight the trend. So again, it's not perfect. There are going to be times where the stock drops below the Bollinger Band and continues to go lower, but it is a good setup to actually, or good habit to wait for that setup and just build that patience because you don't want to be selling Riot when it's towards the upper Bollinger Band, when it's like at, let's see what the price was at this point. I'm trying to see. It was somewhere at $22. That's not the point you want to be selling cash secured puts. That's actually the time you want to be doing covered calls. Also on this day, the VIX was probably low. I don't know. I would have to go back and check. But this is where you want to be selling cash secured puts right now. And you want to be selling at like 13, 12. I also look at Delta. We'll get into that in a second. But the other indicator I like looking at, and I already have it pulled up, so we could just look at it here, and that is the RSI. And that is the relative strength index. And this is also a sort of confirmation of this setup. Now, it is, well, the way I look at it is if the RSI is below 30, that's an indication that the stock is oversold. And that's where buyers might step in. Now, on the other hand, if RSI is above 70, that's showing that it's overbought and momentum might fade or might come back to its value or pull back a little bit. So when I see RSI low, like it is right now, and also the price is sort of hugging that lower Bollinger Band, and then also the VIX being high, that's the perfect setup for selling cash secured puts. Vice versa for covered calls, if RSI is super high, let's actually look over here. When RSI is super high, when it's towards the upper Bollinger Band, when VIX is low, that's a great opportunity to sell covered calls. Now, again, this is not perfect. There's other headwinds and tailwinds. There's mainstream news. There is earnings. There's a bunch of things that also affect the stock other than these indicators. But this is sort of a good habit to build and just building that overall patience and having that good setup. And that's what I look at. And yeah, that's my go-to for a high probability short-term option trade or cash secured put. And again, I'm not trying to catch the bottom. It can go lower, but I am trying to put the probability of success in my favor. And I'm also looking at deltas, making sure I'm choosing the correct strike prices. So there is more involved than just looking at that. But once I have those signals, that's when I sort of choose my sort of trade. And I do the cash secured puts if I'm bullish on a stock and I want to collect premium based on fear. And then credit spreads, if I want to manage risk with less capital, I do mix in some credit spreads. I don't do it too often, but I'll do it just to kind of get better returns or put up less capital and be able to do a similar trade. So I do mix in some credit spreads. They're not perfect. They do go wrong sometimes, but I do mix them in every now and then. And then I also do covered calls. You could see here on a bunch of stocks, Riot, I'm doing it on. So you could do covered calls and cash secured puts at the same time on the same stock and sort of set up a strangle. That's kind of what it is describing. But you can do covered calls if a stock that you own looks kind of overbought and you still want to collect that premium or collect that income. And again, I do look at delta. I try to do, my rule is 10 to 30 delta. That's a good setup when doing cash secured puts or even covered calls. And that's a good balance between profitability and probability. But you can see I'm not swinging for home runs. I'm stacking those consistent wins. These premiums, they do stack up. You could reinvest and they compound. So before I even do my cash secured put, I will check to see if there's any news, recent news, earnings date, sector sentiment, and because I don't want to sell a put on a day that's not a good setup. So for example, today, something like the VIX is down. Even though the stock is down, the VIX is down, and that's not a time I want to be selling a cash secured put. I do want the VIX to be elevated and confirm that the market is fearful, because right now it's showing that the market's sort of normal, and that means the stock can go further down. And Riot's a crypto mining stock, so the crypto space is doing pretty poorly right now. But I am looking at that. So there are times where I just don't do the trade. I just kind of sit out. And maybe I'm wrong, maybe I missed the boat, but overall, I'm just it's better to make no trade than it is to kind of lose a trade in this scenario. And at least in my eyes, the setup's not there. I could always do it the next day or another time. And then that's kind of how small mistakes do become those expensive lessons. But you can see, this is a very quick, just looking at different indicators. I'm looking at high VIX, that means higher premium. I'm looking at the Bollinger Bands to identify any sort of extremes. The RSI, that's kind of confirming that thesis. And then the delta and the setup, I do make sure that is important and that controls risk. And this is what I do. I do this almost every week. I do it at least once a week. I'll look at the VIX, I'll look at the stock, and I'll just do a quick scan and then I'll move on. I don't need 10 screens or 50 indicators. I just have a consistent system and patience. If this video helps you out, drop a like, comment your favorite indicator, and I'll catch you in the next one. Peace.